Before you skip this video, let me show you something that could change your financial future forever. While everyone's distracted by Bitcoin and stocks, one precious metal is about to experience the most explosive move we've seen in decades. I'm talking about silver, and what's coming in the next 7 days could turn a modest investment into life-changing wealth. But here's the catch. We're in the final dip before the launch, and if you miss this window, you'll be watching from the sidelines as others multiply their money. Stay with me, because by the end of this video, you'll understand exactly why silver is about to hit $150 per ounce. And more importantly, what you need to do right now before it's too late. Let me start by addressing the elephant in the room. I know what you're thinking. $150 per ounce? That's almost a 5 times increase from current prices. That sounds absolutely insane, right? Well, let me take you back to 2011. Silver hit nearly $50 per ounce in a matter of months, jumping from around $17. That's a nearly 300% increase in less than a year. And that wasn't even during a perfect storm scenario. What we're facing right now is far more explosive, far more dangerous, and far more profitable if you position yourself correctly. The global financial system is showing cracks that even mainstream media can't ignore anymore. Central banks around the world have been buying gold and silver at record rates, but here's what they're not telling you. The silver market is tiny compared to gold. The entire above-ground silver supply that's available for investment is worth less than $1 trillion. To put that in perspective, that's less than the market cap of just a few big tech companies. When institutional money starts flooding into silver, and trust me, it's already beginning, the price won't rise gradually. It will explode vertically because there simply isn't enough physical silver to meet the demand. Now let's talk about why next week is so critical. We're currently in what I call the final dip, that last shakeout before the massive move higher. This is a pattern we've seen throughout history before major bull runs. The big players, the institutions, the central banks, they need to accumulate massive positions. They can't do that if prices are rising. So what do? They engineer one last drop, one final panic that scares out the weak hands and lets them load up at bargain prices. If you look at the charts right now, silver is trading near critical support levels. We're seeing a classic bear trap formation, and every technical indicator is showing extreme oversold conditions. This is the setup that dreams are made of. But technical analysis is just one piece of the puzzle. Let's talk about the fundamentals, because this is where things get really interesting. Silver isn't just a monetary metal anymore. It's become absolutely critical for the technology that's driving our modern world. Solar panels require massive amounts of silver. Each panel uses about 20 grams of silver, and global solar installation is exploding. Electric vehicles use significantly more silver than traditional cars. We're talking about 25 to 50 grams per vehicle for traditional EVs, and up to a kilogram for hybrid vehicles. The green energy transition that governments worldwide are mandating isn't optional, it's happening, whether we like it or not. And it cannot happen without silver. Then there's the electronics industry. Every smartphone, every computer, every electronic device contains silver because it's the best conductor of electricity. With 5G networks rolling out globally and the Internet of Things expanding exponentially, the industrial demand for silver is skyrocketing. But here's the kicker, we're not mining enough silver to meet this demand. In fact, silver mining has been declining. Many silver mines are becoming depleted and the cost of extraction is rising. We're facing a supply deficit that's growing larger every year, and this isn't something that can be fixed quickly. It takes years to bring new mines online, and even then, there aren't enough new discoveries to replace what we're consuming. Now combine the supply crunch with what's happening in the monetary system. Inflation is far from defeated, despite what the headlines say. Real inflation, the kind you feel when you're buying groceries or paying rent, is still eating away at purchasing power. Central banks have printed more money in the last few years than in entire decades before. All that currency has to go somewhere, and historically, when people lose faith in paper money, they run to precious metals. Silver has been money for 5,000 years, and that's not going to change just because governments say so. Let's talk about what's happening right now in the physical silver market, because this is where the story gets absolutely wild. Dealers are reporting unprecedented demand from retail investors. Premiums on physical silver coins and bars have remained stubbornly high, even as paper prices have dropped. You know what that tells me? It tells me there's a massive disconnect between the paper silver market and the physical silver market. On paper, through futures contracts and ETFs, you can pretend there's plenty of silver. But when people actually want to take delivery of physical metal, suddenly it's much harder to find and much more expensive. The COMEX, which is the primary exchange for silver futures, has been experiencing some very interesting developments. The amount of silver available for delivery has been declining while open interest remains high. This creates a potential squeeze scenario. If even a small percentage of paper silver holders decide they want actual physical delivery, the system simply cannot handle it. There isn't enough physical silver in the vaults to back all the paper claims. This is exactly the kind of situation that leads to explosive price moves, and we're closer to that breaking point than we've ever been. But let's bring this to next week specifically, because timing is everything. We're entering a period where several catalysts are converging simultaneously. First, there are major economic data releases coming that could shock the markets. If these numbers come in worse than expected, which many analysts are predicting, we could see a flight to safety that benefits precious metals. Second, there are geopolitical tensions that are reaching critical levels. I'm not going to get into specific conflicts, but you're aware of what's happening around the world. Uncertainty drives people to safe haven assets, and silver is one of the ultimate safe havens. Third, and this is crucial, we're seeing technical breakouts in related markets that historically precede major moves in silver. Gold has been showing strength, and silver typically follows gold with leverage, meaning when gold moves up 1%, silver often moves up 3 to 5%. The gold to silver ratio, which measures how many ounces of silver it takes to buy 1 ounce of gold, is still historically elevated. Right now, it takes about 85 ounces of silver to buy 1 ounce of gold. Historically, this ratio has been much lower, often around 50 to 60. When this ratio corrects, and it always does, silver massively outperforms gold. That correction could start next week. Now I want to address something important. Some of you are probably thinking this sounds too good to be true, and I respect that skepticism. The markets are full of hype and false promises. So let me be crystal clear about something. I'm not saying silver will definitely hit $150 next week. What I am saying is that we're setting up for a move that could take silver to that level over the coming months, and next week could be the launch point. The final dip we're in right now is your opportunity to position yourself before the move begins. Once the momentum starts, trying to chase the price higher is a losing game. Let's look at historical precedents to understand the magnitude of what's possible. In 1979 to 1980, silver went from around $5 to $50 in a matter of months. That's a 10 times return. In 2010 to 2011, silver tripled from around $17 to $50 in less than a year. In both cases, there were warning signs beforehand, patterns that smart investors recognized and acted on. We're seeing those same patterns right now. Extreme sentiment negativity, check. Supply and demand fundamentals favoring higher prices, check. Monetary instability and currency concerns, check. The stage is set. But here's what most people don't understand about these explosive moves in silver. They don't happen gradually. Silver can stay quiet for years, boring everyone to tears, and then suddenly, in a span of weeks or months, it can double or triple or more. This is because silver is a relatively small market with low liquidity compared to stocks or bonds. When big money wants in, there's not enough supply to meet demand without prices shooting higher. It's simple economics, but the speed and magnitude of the moves shock people every time. So what should you be doing right now? First, if you don't own any physical silver, this final dip is your moment to start accumulating. I'm talking about actual physical silver, coins or bars that you can hold in your hand. Not paper silver, not promises, but real metal. Yes, you'll pay premiums over spot price, but those premiums are insurance against the paper market games. When silver really takes off, the premiums will explode even higher, and you'll be glad you paid today's prices. Consider government-minted coins for their recognizability and liquidity, or bars for lower premiums if you're buying larger quantities. Second, understand that this is not financial advice. I'm not a financial advisor, but I'm sharing what I'm seeing and what makes sense based on decades of market patterns. You need to do your own research and make decisions based on your own financial situation. Never invest money you can't afford to lose, because while I'm highly confident about silver's long-term trajectory, markets can be unpredictable in the short term. That said, the risk-reward ratio right now is one of the best I've seen in years. The potential upside is enormous, while the downside at current levels appears limited. Third, think about position sizing. Don't put everything into one asset class, but make sure silver is part of your portfolio. Financial experts often recommend 5 to 10% of your portfolio in precious metals as a hedge against economic uncertainty. Given the current setup, some people are going higher than that, but you need to decide what makes sense for you. The key is to have enough exposure that when silver does make its move, it meaningfully impacts your wealth, but not so much that you're stressed if we see short-term volatility. Now let's talk about the psychology of what's about to happen, because understanding this will help you make better decisions. Right now, sentiment towards silver is extremely negative. People are bored with it, frustrated by its underperformance, and many have given up. This is exactly when the best opportunities appear. The best time to buy is when there's blood in the streets, when everyone else is scared or disinterested. Next week, if prices dip even lower before the reversal, you're going to see panic. People will be selling. That panic is your opportunity. When the move higher starts, it will feel uncomfortable at first. Prices will jump, then pull back, then jump higher again. Many people will sell too early, taking small profits and missing the real move. Don't be that person. If the fundamentals that drove you to buy silver are still intact, and they will be, then short-term volatility shouldn't shake you out. Remember, we're targeting $150, not $30 or $40. The big money is made by those who can hold through the volatility and let the major trend work in their favor. Here's another critical point that most people miss. The mainstream media and financial institutions will tell you silver is overvalued even as it's rising. They'll trot out experts who will give you 10 reasons why the rally can't continue. They'll compare it to bubbles and warn about crashes. Ignore them. These are the same people who missed the bottom and will miss the top. They're not looking at the fundamentals, the supply and demand, the monetary dynamics. They're just reacting to price movements and fitting narratives around them. The real insiders, the central banks, the billionaire investors, the people who move markets, they're not selling silver. They're accumulating it quietly. You can see this in the data if you know where to look. Central banks in countries that are moving away from dollar dependence are building silver reserves. Mining companies are hoarding production rather than selling at current prices. Large investors are taking delivery from COMEX rather than rolling futures contracts. All of this tells you which way the smart money is positioned. Let me paint you a picture of what happens when silver really starts moving. Initially, it will be a quiet advance. Prices will start creeping higher, maybe 5%, then 10%. Most people won't notice. Then it accelerates. 20% gains, 30% gains. Now the financial media starts paying attention. Articles appear asking whether silver is in a bubble. Retail investors who sold at the bottom start feeling regret and FOMO, fear of missing out. They start buying, which pushes prices even higher. This creates a feedback loop. As prices rise, more people take notice. Social media explodes with silver content. Everyone suddenly becomes a precious metals expert. Physical silver becomes harder to find as dealers sell out. Premiums skyrocket. People who want to buy can't find product, or they have to pay massive premiums over spot price. This has happened before, and it will happen again. By the time silver is making headlines everywhere, we could already be at $100 or higher. The move from 100 to 150 could happen in days, not months, because that's when true mania sets in. But here's what you need to understand. This isn't just about making money, although that's certainly part of it. This is about protecting yourself and your family from the economic instability that's coming. The debt levels in developed nations are unsustainable. The monetary experiments central banks have been running are unprecedented in human history. We don't know how this ends, but we know it doesn't end with your paper currency maintaining its purchasing power. Silver is insurance against the failure of this system. And unlike paper insurance policies, silver can't default or refuse to pay out. Think about what $150 silver means in practical terms. If you buy just 100 ounces today at current prices of around $30, that's $3,000 invested. At $150 per ounce, that position is worth $15,000. That's a $12,000 profit on a $3,000 investment. Scale that up based on how much you can comfortably invest. 1,000 ounces would turn 30,000 into 150,000. These aren't impossible numbers. They're based on historical price targets and the fundamentals we've discussed. As we approach the end of this video, I want to emphasize the urgency of the situation. Final dips don't last forever. By their very nature, they're short-lived events that trap the maximum number of people on the wrong side of the market before the big move. Next week could be when this final dip ends and the real move begins. I can't tell you the exact day or hour, nobody can, but all the indicators are flashing that we're very close. Every day you wait is a day you might miss the bottom. Here's my challenge to you. Don't just watch this video and forget about it. Take action. Do your own research. Look at the supply and demand data. Study the historical charts. Talk to precious metals dealers and ask them about current demand. Check the premiums on physical silver. Look at what central banks are doing. All of this information is publicly available and it all points in the same direction. Then make a decision based on what you learn. The worst thing you can do is nothing. Remember, the wealthy don't get wealthy by following the crowd. They get wealthy by seeing opportunities before they become obvious and having the courage to act on them. Silver at current prices, potentially dropping even lower next week for the final shakeout, is one of those rare opportunities that comes along maybe once or twice in a decade. The people who positioned themselves in gold and silver before the 2011 run made fortunes. The people who bought silver under $5 before the 1,980 spike became wealthy. This could be your moment. I want to leave you with one final thought. Whether silver hits $150 next week, next month, or next year doesn't change the fundamental story. We're in a bull market for precious metals that likely has years left to run. The fiat currency system is dying, slowly but surely, and the transition back to real money, to tangible assets with intrinsic value, is inevitable. Silver is uniquely positioned because it's both a monetary metal and an industrial metal. The demand from both sides is only increasing. So yes, I believe we're in the final dip before silver makes a historic move. Yes, I think $150 is not only possible but likely as this bull market matures. And yes, next week could be the turning point we look back on and recognize as the moment everything changed. But ultimately, you have to make your own decision. You have to assess your own risk tolerance, do your own research, and act according to your own conviction. What I can tell you is that the opportunity is here, right now, and opportunities like this don't wait for anyone. The train is about to leave the station. Make sure you're on it.